Welcome back, everyone. We're diving into a book today that really gets into the nitty-gritty of winning and losing, especially when it comes to, well, money.
Oh, this should be good. Which one are we tackling?
It's called What I Learned Losing $1 Million by Jim Paul.
Okay, I've heard of this one, but it's not just another, get-rich-quick manual, is it?
Nope, not at all.
Yeah.
It's more about the mental game, the psychology of risk and decision-making, the traps we can all fall into.
I like where this is going already.
And the best part is, it all starts with this super unexpected origin story. Jim Paul's time as a caddy.
Wait, a caddy? Like on a golf course?
You got it. That's where he first learned that income mattered more than the job itself. The whole work smart, not hard philosophy.
Interesting. So it's about finding those shortcuts.
Exactly. See, as a caddy, he's surrounded by all these wealthy golfers. And he starts to notice something. The most successful caddies weren't always the hardest workers.
Okay, now I'm really intrigued. Give me an example.
So there was this one caddy, Goose. Yeah. Goose was a legend. He'd spend most of his time playing nickel pitching games with the other caddies instead of, actually working.
Sounds like my kind of guy. But was he actually making money that way?
Oh, he was raking it in. More than Jim Paul, who was out there hauling heavy bags all day.
Wow. What a lesson for a young guy.
Right. It showed him that sometimes the unconventional path is the most profitable. And that work-smart mentality, it stuck with him.
So he carried that mindset into other parts of his life.
Oh, absolutely. School, the military, job applications. He always looked for an edge, a way to game the system.
That's fascinating. He was always thinking ahead, looking for that loophole.
He was. When it came to joining a fraternity, he totally threw out the playbook.
So
most people go through Rush, right? All those interviews, the structured events, the whole 9 yards.
yeah, it's a whole process.
Jim Paul and his buddy, they decided it was too much work. So they did something completely audacious.
What did they do?
They just called up the Kappa Sig House and asked for their pledge pens.
They just asked for them.
Straight up. And the fraternity brothers were so stunned, they actually gave them the pins.
No way. That's hilarious. Talk about confidence, right?
Right. Or maybe just pure boldness. But it worked. And it just reinforced his belief that he could bend the rules in his favor.
I'm starting to see a pattern here. He never backed down from a challenge.
And that fearlessness comes up again during his pledge days. He was supposed to do all these chores like shining shoes, cleaning up, the usual hazing stuff.
Yeah, those rituals.
But Jim Paul, he finds a way out. He challenges a senior member to a gin rummy marathon.
A gin rummy marathon?
And not just a quick game. They played for 17 hours straight.
17 hours. Who has that kind of stamina?
Jim Paul did. And he won. Not only the game, but his freedom from those chores.
Wow. That's classic Jim Paul, always working the angles, finding the win-win.
So we've got Jim Paul, the work-smart caddy, the rule-bending college student. When does Wall Street enter the picture?
So it actually happens while he's getting his MBA. He lands this part-time job at a brokerage firm.
Okay, so now he's going the traditional route.
You'd think so, right? But even then, he can't resist finding a way to play the system. He had to take this personality test, the Minnesota Study of Values test, to see if he was a good fit for the brokerage world.
Those personality tests, they can be tough.
Jim Paul saw it as a challenge. He didn't just want to pass, he wanted to ace it.
So what did he do?
He got his hands on a book that explained how the test worked. He didn't actually study the material, just the test itself.
He studied the test. Genius.
His score was off the charts, almost too perfect.
So he gets the job thanks to his amazing personality test score.
Well, that and his networking skills. Remember, he's always working the angles, making connections, and he rises through the ranks quickly. He even ends up teaching part of the training program.
Wow, so he basically outsmarted the system again. But I have a feeling we're getting closer to that losing $1 million part of the story.
We are. But you're right, understanding how he achieved that success, it's crucial, It shows how that success itself can actually lead to overconfidence.
Okay, so we have the hotshot broker. Check. What's next?
Next, he sets his sights on Chicago, the heart of the futures market. He buys a seat on the Chicago Mercantile Exchange and becomes a full-fledged trader.
Now we're talking big leagues. So is his winning streak still going strong?
Oh, he's making serious money, trading lumber, rubbing shoulders with all the industry giants. At 33, he even gets elected to the board of governors of the Chicago Mercantile Exchange.
Talk about reaching the top. But there's got to be a catch, right? It can't all be smooth sailing. What brings this high flyer crashing down?
Soybean oil.
Soybean oil. That doesn't sound very exciting.
It wasn't glamorous, that's for sure, but this is the trade that made him a legend and ultimately, well, broke him.
Okay, now I'm all ears. Tell me more about this infamous soybean oil trade.
So Jim Paul becomes convinced that the soybean oil market is about to explode, like really take off. And he's so sure of it that he starts putting on these massive positions, betting big on a price surge.
So he goes all in.
He goes all in and then some. He's not just risking his own money, he's convincing everyone he knows to get in on the action. Friends, family, even his secretary.
And initially, does it pay off?
It does, at first. The market goes up, just like he predicted, and he's making a fortune, hundreds of thousands of dollars, every single day. Imagine that vacations, parties, the high life, he's living the dream.
This is the peak of the mountain.
Yeah.
Right before the fall.
Exactly. But then things start to change. The market shifts.
Does he get out in time?
He doesn't. He clings to this belief that it'll swing back in his favor. He's rationalizing every bit of news, ignoring all the red flags.
Yeah.
Deep in denial.
So losses start piling up.
Fast. And it starts to affect every aspect of his life. His sleep, his health, his relationships. Think about the psychological impact. The denial, the anger, the bargaining.
The 5 stages of grief.
He goes through them all. He even contemplates suicide at one point, thinking it's the only way to protect his family. That's how devastating those losses become, especially when his whole ego was tied up in it.
Okay, so we've left Jim Paul at his lowest point. Where do we go from here?
This is where the real learning begins. It's not just about how he lost $1 million. It's about what he discovers about himself in the process.
So last we left off, Jim Paul was, well, let's just say he was picking up the pieces after that soybean oil disaster. Quite a contrast from that confident trader we saw earlier.
Yeah, it's a humbling experience, to say the least, going from the top to, well, you know.
Exactly. So how does he even begin to recover? I mean, he's lost a fortune, he's in debt, plus dealing with all the emotional fallout.
Well, his first step towards recovery was actually kind of a fluke. His accountant, he figures out a way for Jim Paul to get a tax refund by averaging his income over the previous 3 years.
So a little breathing room, courtesy of the IRS.
Exactly. It wasn't a huge amount, but it gave him just enough capital to start thinking about, getting back in the game.
So he's back on the trading floor. Did he go straight back to his old ways, trying to win it all back in one shot?
You might think so, right? But something had changed. He realized that simply knowing how to make money wasn't enough. He had to understand why he'd lost it all.
He needed to figure out how to avoid making the same mistakes.
He becomes a student of the market, basically, reading books by all these legendary investors, analyzing their strategies, trying to find that secret formula.
So he's not just playing the game anymore, he's studying it.
But here's what he discovers. There's no magic formula. In fact, he finds that a lot of the advice from successful investors, it actually contradicts itself.
So there's no one-size-fits-all approach.
Nope. Jim Paul realized that what works for one person might be disastrous for another. Everyone has their own style, their own risk tolerance.
So it's less about the right method and more about understanding yourself.
Exactly. And a big part of that is coming to terms with loss, something that, well, most of us try to avoid.
Because who wants to think about losing? It's not exactly pleasant.
Right. We all want to win. But Jim Paul's journey forces him to confront that uncomfortable truth. Loss is inevitable. It's part of the game. And learning to manage it, well, that's crucial for long-term success.
So how does he even begin to wrap his head around that concept of loss?
He makes this really important distinction between internal and external losses. External losses, those are the objective events, like, say, you lose a bet or a game.
Like if your favorite sports team loses.
Exactly. You can't change the score. But internal losses, those are how we feel about those events. They're subjective, personal.
So 2 people could experience the same external loss, but have totally different internal reactions to it.
Exactly. One person might shrug it off. The other person might go into a tailspin. And that's where things get tricky with the markets, because those financial losses, they can feel very personal.
It's easy to tie our self-worth to our net worth.
Right. And that's what happened to Jim Paul. He let those losses define him. He was so focused on being right that he couldn't accept being wrong.
Which led to more emotional decisions, trying to avoid the pain of being wrong.
And that just perpetuates the cycle, leading to bigger losses.
So he had to find a way to break free from that cycle.
One of the turning points comes from a conversation with his friend, Johnny. Jim Paul's complaining about all the lawsuits and complaints he's facing after losing his client's money, and Johnny just listens patiently. Then he gives him this really simple advice. He says, you just have to go back to work.
Go back to work. That's it.
Sounds simple, right? But for Jim Paul, it was huge. It helped him to see that dwelling on the past wouldn't solve anything. He had to shift his focus from the past to the present, from what he'd lost to what he could still achieve.
So instead of wallowing in self-pity, focus on moving forward.
Exactly. And that leads to another one of those key insights, understanding the different types of market participants.
Okay, I'm ready for another lesson. What are the different types?
Well, Jim Paul, he breaks them down into 5 categories: bettors, gamblers, investors, traders, and speculators.
Sounds like quite a mix. What are the key differences?
Well, bettors, they're mainly concerned with being right. They want to prove their knowledge.
So it's more about ego than profit.
Often, yes. Now, gamblers, on the other hand, they're in it for the thrill, the excitement, the adrenaline rush.
They're chasing that high, even if it means risking it all.
Exactly. Now, investors, they have a longer-term perspective. They're looking for capital appreciation, dividends, building wealth over time.
Slow and steady wins the race.
Then you have traders. As the name suggests, they're more active. They buy and sell more frequently, trying to capitalize on those short-term price swings.
They're the ones with the quick reflexes.
And lastly, speculators. Similar to traders, but they take on more risk. They're aiming for those bigger profits.
The daredevils of the market.
You could say that. So Jim Paul, he realizes that understanding which type of participant you are, well, that's essential for making good decisions.
So knowing yourself, your risk tolerance, that's key.
Right, because he realized he'd been acting like a gambler, chasing those wins, ignoring the potential consequences.
So he needed to shift from gambling to something more sustainable.
And that brings us to another crucial concept from the book, the psychology of crowds.
The herd mentality. How does that play into the market?
Well, Jim Paul, he argues that individuals, they can become part of a psychological crowd, even when they're acting alone.
So you don't have to be physically surrounded by people to get caught up in that crowd behavior.
It's more about adopting that mindset, letting your emotions override your judgment. Think about it. Have you ever bought a stock just because everyone else was talking about it?
Oh yeah, that FOMO feeling.
Yeah.
Fear of missing out.
Exactly. That's the crowd mentality at work. And it can be dangerous, especially in the markets.
So how can you tell if you're falling prey to that? What are the signs?
Jim Paul highlights 3 key characteristics: a sense of invincible power, contagion, and suggestibility.
Okay, break those down for me. What does invincible power look like in the market?
Well, think back to Jim Paul during that soybean oil winning streak. He felt unstoppable, like he had it all figured out. That's the invincible power. You start to believe you can't lose.
But the market has a way of humbling us all.
Right. Then there's contagion. That's the spread of those emotions, like a virus jumping from person to person.
Like when everyone's buzzing about a hot stock, you get caught up in the hype, even if you don't really understand the company.
Exactly. And then suggestibility. That's the tendency to be swayed by the opinions and actions of others, even when they go against your better judgment.
You're more likely to follow the crowd than to think for yourself.
Basically. And all 3 of these, they can lead to really bad decisions. You're letting your emotions drive the bus instead of logic and reason.
So how do we avoid getting swept up in all that? What's the antidote?
That brings us to the final, and maybe the most important takeaway from the book: the power of a plan.
Okay, I'm ready for the grand finale. How does a plan help us avoid those psychological traps? So, we're talking about the importance of having a plan, especially, when it comes to the markets. But it's one thing to know you need a plan and actually sticking to it. That's a whole other ballgame.
Oh, absolutely, especially when emotions are running high, which is exactly what Jim Paul had to deal with, right? Rebuilding his career, trading Eurodollars.
Eurodollars. Why that market?
Well, it wasn't the same roller coaster as soybean oil. Those are a type of interest rate futures contract. They tend to be a little more predictable.
So it was a good testing ground for his new approach.
Exactly. Less volatile, less chance of getting wiped out overnight. But, at first, old habits die hard.
He couldn't just shake that gambler's mentality.
It's tough, Even when you know better, those ingrained biases, those emotional responses, they can really sabotage you.
So how do you break free?
He had this realization, this kind of epiphany. He couldn't control the market no matter how much research he did, how many charts he analyzed.
That must have been tough to admit for someone who always believed they could beat the system.
It was. But once he accepted that, he could focus on what he could control: his own actions, his own responses.
So it's not about predicting the market, it's about managing yourself.
Exactly. For Jim Paul, that meant sticking to the plan no matter what, even when everything inside him was screaming to do something else.
Sounds like it takes incredible discipline. especially after a loss like that.
Oh, it does. But he was determined to prove that he could learn.
So he's back on track. New knowledge, more discipline. What happens?
He rebuilds his career, achieves consistent profitability. He conquers that soybean oil demon.
Pretty inspiring. Shows you can come back from anything with the right mindset.
It's not about talent or luck. It's about understanding risk and knowing that you'll make mistakes, but how you respond. That's what matters.
You know, we talked about how his early success might have actually set him up for that fall. Success can be a double-edged sword, right?
It definitely can. When things come easy, it's easy to get overconfident. Start believing you're invincible.
Success breeds complacency.
Right. And Jim Paul's story is a cautionary tale.
So how do we avoid that trap?
Cultivate humility. Remember that success is often a mix of hard work, talent, but also, luck and timing.
Don't get too big for your britches.
Exactly. Challenge your assumptions. Be open to new information, even if it contradicts what you think you know.
It's easy to get stuck in our ways,
Right.
especially when they've worked before.
And have a plan. One that protects you from, yourself, your emotions, your biases.
The plan keeps you grounded, even when things get crazy.
It takes the emotion out of it.
Well, this has been quite a ride. Jim Paul's seen it all, the highs, the lows.
And he came out the other side with some real wisdom to share.
Definitely a must-read for anyone who wants to understand, that human side of winning and losing.
Timeless.
That wraps up our deep dive into what I learned losing $1 million. Fascinating story and tons of valuable lessons.
Success isn't a straight line. It's about learning, adapting, and having that plan to guide you.
And sometimes losing it all can be the best lesson. Thanks for joining us.